What if you're unknowingly leaving thousands on the table? Not because of a bad decision, but because you didn't act before December 31st. Every year, millions of untapped opportunities quietly slip through the cracks. Missed RMDs, unmade Roth conversions, gifts that never got documented, and when the clock strikes midnight, many of those opportunities close for good, at least for this tax year. You've worked too hard to let that happen. Today, I'll show you 3 smart, tax-aware moves you can still make before December 31st to protect what you've built and position yourself for a stronger 2026. I'm Vicki Joern, a financial advocate who helps people navigate major life transitions with clarity and peace of mind. If this helps you finish the year stronger, please like, subscribe, or share it with someone who deserves a financial fresh start. Year-end isn't just about another date on the calendar. It's a financial deadline that can open or close important opportunities for this tax year. Once December 31st passes, RMDs that weren't taken may trigger a 25% IRS penalty. Roth conversions roll into the next tax year, and most charitable distributions no longer qualify for a deduction this year. That's why this season is the perfect time to pause, review, and make sure your money is positioned to work for you, not against you, as we step into a new year. There are 3 moves you need to look at before the end of the year. Move number one is review your RMDs. If you're 73 or older, or if you've inherited an IRA, your RMD required minimum distribution is the government's way of making sure your tax-deferred savings eventually gets taxed. For most current retirees, the age to start RMDs is 73. If you turn 73 after 2022, that rule applies to you. Here's what to check before December 31st. Confirm you've taken the correct amount from each qualified account. RMDs from IRAs and 401ks must be calculated and withdrawn separately. They don't combine. The deadline is December 31st except for your first RMD, which can be delayed until April 1st of the following year, though that could mean 2 distributions in 1 year. If you don't need the income, you can send part of or all of it directly to charity through a qualified charitable distribution. Available for those of you that are 70 and a half and older. You can contribute up to $100,000 per year indexed for inflation. It's called a QCD, and it counts towards your RMD and keeps that amount out of your taxable income. A smart way to support a cause you care about and keep your plan on track. Have you double-checked that all of your accounts are covered this year? It's a simple step that can save a lot of headaches later. Move number 2, use the Roth conversion window. Roth IRAs are a powerful tool because when done correctly, future qualified withdrawals can be tax-free. That's great, but any conversion must be completed by December 31st to count for this tax year. For many people who transition between jobs, newly retired, or adjusting after a spouse's passing, income may temporarily fall into a lower tax bracket. That's often when a partial Roth conversion may be most beneficial. The key is balance. Convert just enough to fill your current tax bracket without spilling into the next one. That's where guidance from a trusted financial or tax professional can make all the difference. Remember, the amount you convert is taxable this year, and if you follow the Roth rules, future qualified withdrawals can be tax-free. Conversions are permanent under current IRS rules, so you'll want to be sure before you proceed. It's about strategic timing, not tax avoidance. Prepaying taxes on your terms, not the IRS's. Have you checked whether this year's tax bracket might open a small conversion opportunity for you? Check it out. Move number 3, charitable and gift strategies. Giving is more than generosity. It's a powerful part of financial planning that connects your resources with what matters most. If you're age 70 and a half or older, did you know you can donate up to $100,000 per year, adjusted for inflation, directly from your IRA through a qualified charitable distribution, or it's called a QCD, and it counts towards your RMD and it's excluded from your adjusted gross income. It's a simple way to give with both purpose and tax efficiency. Many people use their QCDs to support a cause or charity close to their heart. It's a heartfelt way to make an impact while staying tax aware. For younger donors, bunching 2 years of charitable gifts into one tax year may create a large deduction and help you stay within itemized deduction limits. And if you're helping family, remember in 2025, you can give up to $19,000 per person per year without filing a gift tax return. Sounds great. These choices aren't just about numbers, they're about meaning. They let you support people and causes you care about while keeping your plan balanced. So how could your giving this year reflect the legacy you want to leave? Think about that. I'd like to talk about the Jamesons. Let me share a quick example that might sound familiar. A retired couple, let's call them the Jamesons, were living comfortably on their pension and Social Security. They didn't meet the required minimum distributions for everyday spending, but they did want to support their church building fund. So they decided their RMDs should go straight to the church. Using a QRD, avoiding additional taxable income and making a meaningful contribution to a cause that mattered deeply to them. When we think about it, that's really what smart year-end planning is about, aligning your money with your values so you finish the year both financially and emotionally strong. So, as we close out the year, take a few moments to check in with yourself and your plan and ask yourself these questions. Have I taken all my required distributions for this year? Question 2, would converting a portion to a Roth make sense while my tax bracket is still lower? And 3, did I give or support the causes that truly matter to me? Year-end isn't just a finish line, it's a checkpoint, a moment to pause, get clarity, and make sure your plan still fits the life you're living. And remember, you don't have to figure it out all at once. That's exactly what we're here for, to help you see your options clearly and move forward with confidence. Because sometimes life surprises us, ways we've never expected. And next time I'll be sharing a story about one very unexpected moment that taught me just how fast things can change. If today's episode helped you see ways to finish the year stronger, please like, subscribe, or share it with someone who might need a little financial clarity before the end of the year, December 31st. And if you'd like to talk through which of these year-end moves make sense for you, or how to coordinate them with your advisor or CPA, visit beefinancialpartners.net or call at 832-698-2010. We're here to guide you, helping you look at possibilities, prepare with confidence, and move forward knowing you're not alone. Because as life reminds us, sometimes the unexpected shows up right in our own neighborhood. And next time I'll share a very personal story about that. I'm Vicki Joern, reminding you to be financially prepared for today and the uncertainties of tomorrow.